to use them. And I say that because from a technical perspective, we're seeing classic signs of bottoming, and then as well as some of the flows showing and complementing and confirming that in tokens such as Bitcash, Ripple, Zcash, Dash, etc., where we're seeing some actual breakouts above the downtrend lines that have been in place since fourth quarter last year and first quarter this year. So from a flow standpoint as well as price standpoint, we are starting to see classic formations, classic inflow representations that would be cognizant of and signaling at least a near-term bottom. I don't want to commit to a complete trend change here, but needless to say, it's followed one of the lowest volatility months in crypto, and then immediately after the close of the month, we had a minor new low on a 30-day basis, and then a pretty healthy rally. So it's just conforming to some of the classic asset class bottoms that we've seen over time and that we've been monitoring.
So Chris, let me ask you a question. With regards to Bitcoin itself, do you find that it typically complies with kind of a technical analysis, or do you feel like it has a little bit different personality than other asset classes in trying to analyze its movements?
Yeah, the nuances that we've noticed, and I honestly learned over a few years of trading there's some overhead resistance on Bitcoin because it's one of the tokens that people allocate to first, and then before the advent of all of these USD-based coins or stable coins, quote unquote, you had to send bit to other venues, other exchanges to then convert to other coins. So we're seeing that in terms of performance, there's that little bit of natural lag, and where you can see these resistance points hit by a very violent spike and then a trail, and we kind of attribute that trail off to people then converting bit into other tokens.
I see. Yeah, and that's kind of what I noticed. I'll notice myself. Would you?
Well, I think, Brian, I don't think I answered you clearly, but just to reiterate, Bitcoin itself and cryptocurrency are one of the most beautifully technical asset classes, if not the most beautifully technical asset class that we've seen in modern era.
And why do you think that?
Well, I think this is a subjective answer, not a quant-driven answer, and so my humble opinion is that you don't have some of the passive overlay. You don't have a lot of large institutions compressing volatility, and then you're really driven by individual retail traders, sophisticated hedge funds, long-only hedge funds that are really participating in the market unbridled to, let's say, interest rates or fund flow cycles that we see in the equity markets and or real estate. So I think you just have more of a free market, to put it in, to paraphrase it, and as a result, you're going to get a higher adherence to technical principle because price is unbridled.
That's great. What do you think about the accusations of manipulation in Bitcoin and cryptocurrency market? Do you feel like there's a lot of manipulation going on, or do you think that the accusations are overstated?
Well, I love it, number one, because it gives you an ability to defend the space. And so this might be a longer-winded answer than you wanted, but I think for the purposes of the group, it's important to understand mechanics and structure. And in our experience, I've been investing since I was 14 years old. I'm 36. I've been a quant my entire adult life, whether at Morgan Stanley or independently since 2011. And for me, the word manipulation is thrown around in such a way to suppress innovation and to curtail investment when let me throw it back, the public markets, specifically equities and interest rates and bond markets, they are the most manipulated on earth, and they're very, very transparently set by a governing central authority. So if we want to debate what the word manipulation means, Seeing that in the public equity markets versus Bitcoin is kind of irrelevant. But in terms of what the specific attack is, I think it's on the exchanges themselves to provide market making activities. And some of you may be old school investors, maybe value investors or option traders, and you know that it's on the desks, whether it's an IPO or an option, to create a specific bid-ask bandwidth, a stabilization bid on IPOs, and to market make within a certain tolerance on delta, right? So that's already what big trading desks do. Why would we then accuse Coinbase of quote unquote manipulating Bitcoin when all they're really doing is market making to support the flow of price? So to me, I think it's at least identifying that some of the major crypto players are functionally and mechanically providing the venue to handle more volume in the space. And without it, we wouldn't be able to grow it. So that's my opinion of it.
Yeah, I share that opinion. Having been a market maker ourselves currently, I get that aspect of it, and you're precisely right. I think sometimes the manipulation accusations have a little bit of conspiracy theorists, in that group. Is there any follow-up questions that anyone in the group has with regards to that? Tim?
Sure. Yeah. Chris, I think you got a very interesting point, and I think the only question is, does manipulation exist separate from, your point about basic market making? I assume that you don't believe that there is no such thing as manipulation in the financial markets, and regardless of whether there is or isn't a degree of manipulation in the stock markets, et cetera, I would assume that there is a definition of what manipulation is that's unfair and damages the integrity of the cryptocurrency markets. But market making is it. So I'm just wondering if you have a separate definition of what would constitute manipulation in the cryptocurrency markets. Not that I'm saying it's gone on. I'm just asking that.
Yeah, it's a great question, Tim. Thank you for that. Where I draw the line, and again, this is subjective, this is not quantitative, but where I draw the line is intent, right?
Yeah.
If it was Coinbase or Gemini or whoever's intent to manipulate price, right, there would be some correlative P&L increase on their sheet and or some sort of correlated price action, right? Well, if they're manipulating it, then how the heck did the space contract, 70%, if you go to the altcoins, even more? So to me, intent matters. And if the intent is just to allow the space to survive as well as to receive more flows, that's a good intention that then changes the framework of whether it's actually manipulation or not.
Right. Well, I guess, I assume that you haven't examined, and so it's a space, so it's a little bit of an unfair question, but would you say that you wouldn't rule out that manipulation might have occurred? I'm not saying it has. And of course, couldn't people manipulate by shorting the market? In other words, if the market went down, couldn't there be profit taking that was manipulative through benefiting from a decline in price?
If you're speaking specific to crypto, the derivatives that are available on BitMEX and then the very few exchanges that allow shorting, that's certainly true to some regard, but there has to be both sides of the market. That's what makes a healthy market. So I would argue that the impacts of shorting in the space have been somewhat muted because there's not the venues to provide, the corresponding capital on the short side. And so you're not going to get a one-to-one push just by mere structure, right? You can't, there's 227 billion in the space, you can't short 227 billion. It's not logistically possible. So while I do think, looking sizing, and we track Bitfinex shorts very similar to how we track shorts on the commercial versus speculator side in the Commitment of Traders reports, which are provided by the CFTC every Tuesday. And looking at the percentage effects of what might be there, which we can measure quantitatively, in my humble opinion of this downturn, it may be accounted for 10 to 20% of the downside. And mind you, it provides a violent upside effect as a cover.
Okay, so you're saying, and Brian, tell us at any time when you want to move on.
No, I'm about to move on, but you're fine. No, go ahead. I finished the point.
Just to clarify what you said, Chris, are you saying that you feel that the price manipulation with the intent to manipulate for profit may have comprised 10 to 20% of the total Bitcoin decline between December and now?
Yeah, but I don't consider shorting it manipulation.
No, but were you saying manipulation or just shorting it just now?
The effects of shorting it by mere quantity of size.
Right.
Oh, sure. Okay.
I would argue any of the quote unquote manipulated, effects on these various exchanges that defaults into a supportive price action.
Okay, so Brian, I'm going to let you move us on. I was just going to ask, and we can take it offline, Chris, whether you thought that the accusation, there's been an academic accusation and an academic disagreement that Tether, the owners of Tether manipulated.
Actually, let's jump into that really quickly,
Okay.
Ken, and then I'll jump on to my other question that I want to take this, because really the group of us we want to get on to what we should do here in the coming weeks and months, but
Right.
but for right now this is a very important point. Chris, as you know, that there's an academic report that accuses Tether of causing manipulation in the market based on the fact that the correlation of transactions with Tether and Bitcoin during the time that it spiked in November and December of last year. And my argument is that there may be a correlation, but I don't think there's a causal relationship, because I really see that Tether enabled a lot more people to get involved, to get in and out of Bitcoin. I think there's a correlation activity, but I don't think there's market manipulation. And I'm wondering if you have any view on that from this ongoing issue.
I do. The group may not like my response because, number one, everything's all part of the herd, regardless of whether it's manipulation or not. So what we're left with as investors is the duty to do our due diligence, but also to not get paralysis by analysis, right? So while Tether very likely enhanced some of the upside in November, December, when in terms of price action alone, the September breakout above 12 absolutely pointed to a price target between 19 and 24,000. So regardless of whether it was enhanced by Tether,
is that price target based on a Fibonacci? What do you base that price target on? Curious.
We based it on quantitative wave fractals, Fibonacci's, and then pattern recognition.
Okay. All right. Interesting. Great. Because you nailed it basically. I wish I was talking to you then, because during that time I was trying to figure out when to get out. I ended up getting out around 17.5. But if you could have told me in advance,
that's pretty darn good.
Yeah, that's pretty darn good. But if you told me in advance I could get out at 19, I would have done that. Anyway, go ahead.
Most money's made selling early, as you know.
Yes.
But I think just it's important to put all of these nefarious accusations into context, because ultimately why we are all intrigued by the space, have passion with investing in the space, is because of what it means to humanity long term. So however price expresses itself, either through a Tether enhancement or a market making enhancement or a short pushed lower, is almost immaterial to our investment thesis. It's just a byproduct of human action.
And I agree with you on that point. So
yeah, I didn't mean to get very esoteric, but that's how we view things.
Yeah, I agree with you on that point. Okay, so looking ahead, one of the things that we've been talking about on this call for the last couple of months is we felt that the price has been in somewhat of a position breakout over the last few weeks, in my opinion. Right? Even when I spoke to you last, Chris, I think several weeks ago, I talked about that pattern. It's interesting that I called the bottom back in February, right? And now you're telling me now from a technical perspective that this actually is the bottom. And the investors on this call can attest, back in February when we hit this bottom, I knew that this was That was it. Based on my understanding of market participants, I wasn't basing it purely on technical analysis, but understanding who the players were, based on the fact that everyone who was concerned about lower lows were all out of the market, and they were all all sold.
Yeah. At this juncture, can you see my 1-year chart that I have up?
Yes. Yeah, we can see it perfectly. And so,
go ahead, Brian. Sorry.
Yeah. So see in February, early February, when it spiked just below, I think maybe 6,000 or something. Yeah, that's the one. That was the low to me as it bounced off of that, and the rest of the year for me has continued to confirm that, from who the market participants are. We've had some bubbles, or not bubbles, but some little bit of movement based on new market participants coming in and the volatility naturally follows. But now, from that point to today, we're basically flat. We've been flat for the last couple months, through August, September.
Yeah.
Right? And so I anticipate a breakout, but none of us have any idea as to what the catalyst is going to be for that breakout, nor when it's going to happen. And so
it's immaterial what the catalyst is.
It's right. It doesn't matter what the catalyst is. We just know that this is a bottom and that we should all remain in, right, until it happens. Any idea on timing?
Well, I got to send everybody a bill if I do that. But essentially, what I'll do is just teach the group just a little bit of basic momentum analysis, and then I'll drill in from the year chart down to monthly.
Okay.
So with this move from the high, we have a very complete sequence in this wave fractal here to the Feb low, right? Both in support targets and measurement of retracements, etc. And then we actually hit a very nice oversold on a weekly chart, right? So that's a good correction, very healthy, really predictable within the trend lines. Where this gets hairy is, in fact, this retrace was good. We made a higher low. We actually have what's called a positive divergence here. If everyone can see my cursor, where
yes,
price lows were made on diverging momentum, and you see it actually try to break out again and got ahead of these moving averages. Where it gets funky is in this period, where we have a dark cross on the moving averages, and then we have some breakdowns where this is actually a breakaway gap, which followed through, again producing another divergence, which goes to exhaustion, and then a very healthy rally where here in July we were getting a little FOMO-y that we weren't long enough, because we saw this overbought sequence, which you see here on these rallies. It did not get overbought. Historically, when a trend changes, if the first move off the new low creates an overbought condition, that's one of the signals you look for. But instead, we retrace back to the support level. So now I'll drill in on the month chart. And you can see here, even this box here, you have positive divergence on this low, and then kind of a breakout above this base with healthy formations. The way we view it from just a macro level is either this big symmetrical triangle here from these trend lines. So you start your trend line here, draw it to this apex, and trend line here and draw it under. It would produce a low between 4,700 and 5,400 to complete it on the downside, or it's going to break out. Either way, again, our position is we're buyers of both of those, because we either have a very complete pattern where we wouldn't get oversold, or we have a breakout confirmation of trend change. And I think looking at the 6 month, we're probably within, some sort of, call it 45 to 90-day period where we would expect that.
Right. And so, do you still expect, or you think that the possibility of a downturn, a breakdown to below 6,000, do you still see that as a possibility, or think that that's the probability of that is probably gone now? Not gone.
Roughly it's probably in the 60-40, 70-30 camp, upside favor. Okay. in that analysis.
Yeah.
And I think, and we're comfortable representing that. Where what we really want to see, just looking at this chart, is a breakout of this first level of resistance between 7,500 and this previous high of around 8,400, and then a pullback probably in this vicinity, 7,000, 7,400, and then a rocket. That would really give us the confidence that we're going to emerge in another 2 to 3 year uptrend.
Right.
I'm sorry, in another what? Somebody's beeper went off.
Another 2 to 3 year uptrend.
Yeah.
Yeah.
And the life cycle of it's made 8 or 9 of these retracements of similar magnitudes where the technical analysis has been pretty identical to this one. It just looks bigger because everybody's paying attention to it.
Yeah. Great.
But it retraced 1,100 to 300 in the very same fashion that it just did 20,000 to 6,000.
Right. And so in the final analysis, we really see that we're at a clear bottom. We've established that, and that the beginning of a bull cycle, probably 2 to 3 years, and that breakout to the upside, probably by the end of the year, right? That should really begin.
Yeah, I think where we saw some heavy flows, both out and then in, were in the short-term low in the stock market. So we do think this may end up attracting some more capital if the bear market in stocks unfolds here in the near term.
Mm-hmm. Can you? I don't know if you want to call Chris. Thank you. This has been very insightful. I think all of us are looking at this and saying, "Wow, this is great. This is really valuable." One of the things that we've talked about in the past is what might be the catalyst, right, to bring in new market participants. I think in order to really grow this, and like you said, it doesn't matter what the catalyst is. But do you have any insight as to what the catalyst might be that is in the near term potentially going to drive the new market participants? Something that we might be looking at, right? What do you think it might be? Any idea?
My honest answer is that I'm not really qualified to speak to it, but as I just mentioned, one of the potential catalysts. But I also think that the addition of new wallets and applications and the additional essentially use assets on the blockchain as they're created, as they're brought to market, and as emerging markets for payment processes, et cetera, as that gets more robust, I think you have a natural attraction on the capital side. And I think the other thing would be knowing how institutions are no longer smart money, they're actually the dumbest money, in our opinion. Once you see a rally above 8 and then a retrace and then another rally, they're going to panic into it. So
right.
That's what I would argue are the 3 core catalysts. Attraction from a bear market in stocks and bonds, actual capital flows due to use assets within blockchain, and then lastly, institutions going, okay, it's time for us to invest in this.
It's time for us to move. We're going to miss out if we don't jump in now.
Right.
Right.
And that's where we would see a new high, essentially.
Okay. I'd like to open it for a minute for any questions from the group for Chris before we move on to any other topics. Does anyone have any questions for Chris?
Yeah, I had a question, Brian.
Yeah, Kunal, go ahead.
Yeah, so I have a lot of friends that are into mining, and they keep telling me that below 6,000 they're not profitable. So does that make an impact on the bottom?
It does. And notice here, if we go back to the year chart, give or take where they are, 6,300-ish is the price. Don't quote me on that because that's not something I pay attention to. But if you notice the November low, this low, all of these lows are give or take hovering in that range. So yes, we believe that is a de facto support mechanisms because they will not mine if they're not making money.
Well, the thing is, they won't sell their Bitcoin if they're not making money. And so what they do is they continue to mine and run their machines and spend the electricity, but they don't want
Right.
to. They don't want to sell it at a loss, so it shrinks. Yeah, so the selling pressure falls way back, right, and the supply and demand curve shifts the other way rapidly when it drops to those levels.
Right, and they're not providing the exchanges with the additional volume, et cetera.
Correct. Yeah. So it dries up.
Good question.
Yeah, good question.
So in that case, it's better to place your bet.
Sorry, you broke up a little bit.
You broke up
I
a
was
little.
thinking it's better to place your bets on the upside, right?
I'm sorry, I didn't hear you very well, Kunal.
Oh, he was saying that it's better to place your bet on the upside then from this level, and I think that's what you've been saying, is that we really the probability to the upside is much more significant than to the down.
Right, and really from our perspective as asset managers, how you are able to put yourself in a position to do that is in your position management. And we use a couple heady theories called leverage space and optimal F that give us a basic formulaic way to both play offense and defense simultaneously. So in my humble recommendation, if you've got an outline of capital that here's my crypto sleeve, obviously it's prudent to not put the whole thing to work all at once, is the point of what I mentioned.
So Chris, do you have a position to the long, or are you waiting for the triangle to resolve to really go in?
So we, well, I can answer that two ways. I can answer it from my personal standpoint, and I can answer it from our fund allocation standpoint. Which do you prefer, or would you like both?
Personal?
All right, so personally, when I saw this low here in August, positively diverge, I began getting aggressive on accumulation. And then with both this, and I'm very passionate about utility and security tokens. So my overweights are not necessarily in sort of the altcoins and or Ethereum. My overweights are in things like Dash, Monero, Zcash, Bitcash, Litecoin, etc. So when on that specific pivot, I was lucky. I got out early personally, and then really started building pretty aggressively on the personal side since August. But I still left myself enough, call it 20 to 25% of capital that I would commit, just in case there's a new low, and then to give me the horsepower to also buy that or the breakout. So that's where I'm at personally. Our fund has over 400% turnover per month, and we have both black box and algo and quant, but we have roughly a 20 to 30% exposure at all times.
Okay, thank you.
And we do not short. All of our performance on a year-to-date basis that we've had in our fund has been without shorting. So we are very biased to the long side.
All right, thank you.
Welcome. And obviously, you folks probably aren't taking the time to short via swaps or on Bitfinex. So I don't have to coach you on where you would get stopped out on your short. But here, the upside risk to a short would be foolish.
Agreed. Other questions?
Yeah, I had another question, Brian.
Yes, go ahead.
What are your thoughts on altcoins versus Bitcoin? And what portion of your funds would you allocate towards altcoins?
We presently, only dabble about 1-2% of the fund in altcoins. We trade 16 coins pretty actively. Our matrix is volume based, right? In order for us to express our thesis and run a business, we have to be able to have scalability and critical mass. So if we can't, and also time, right? Bitcoin and Ethereum have had the most time traded. So we view their quantitative inputs as more valuable than, let's say, Monero. So we are weighting coins not necessarily on our, quantamental based thesis or our personal favorites. We're weighting it on quant data only.
Got it. Thank you.
the caveat to that is I also think that ICO market has had a very healthy explosion. So when the winners emerge, I think they're going to be very large.
Yes, and I concur with that. I think that we're going to enter into another phase, another wave, you could say, of ICOs in the coming future as we have, as everyone's pushing for, more rules and regulations and these securitized tokens. I think we'll have probably another wave of altcoins as people are attracted to the sector based on its price action here in the coming future, right? So as we see it continue to rise and it breaks through, like you said, the 8,000 mark, as it breaks through 10,000 again, we'll have a lot more media exposure to this space. And again, we'll have the same phenomena that happened in late 2017 happen again. And that phenomena is, oh, I've missed out on Bitcoin. What other penny stock can I find that's going to give me a 100x return? And you'll have a lot of speculative investment again in these ICOs and tokens. But again, that bubble will burst as promises are not fulfilled, and just as we had this last time.
Right, and to piggyback on that, Brian, if I may, like we the crypto space, as Brian knows, and he's an expert and one of the most trusted sources in the space. We all talk, we're all friends. It's not like Wall Street where it's a lot of dick measuring. This is a very passionate group of folks that are committed to it, commit their own capital. We're actually almost half of our own fund with our own money to speak to that. And these folks, were supportive of ideas, very similar to how Brian probably was in 90s IPOs on tech, or some of you. And my point would be, when constructing a portfolio, you've got to do both the insourcing side and the outsourcing side, where it's not different than buying, a core blue chip dividend pairs and then allocating to some nice small cap growth names. It's not indifferent to that, but I definitely agree with Brian that the FOMOing is going to cause some explosions in the space. It's better to maybe look for a manager that specializes in that, because I've never ran into a retail or family office investor that actually exited, Ripple when it went up 7 times. So I think it's important to block and tackle with your portfolio and construct it as you would your equity portfolio.
That's spot on. Thank you, Chris. That's spot on. Any other questions from the rest of the sector? I wanted to give Chris the opportunity to talk and introduce him to the group. And Chris, we've recorded this video. It'll only be shared within the members of this group, just so you know. We have a secure area by which we do that, but we'll get other members of the group the opportunity to see this. The other thing is, there are some things going on in the market, so I want to talk about those. If anyone wants to talk about, the recent Bitcoin Cash fork. I'm personally not in Bitcoin Cash, and I don't know that anyone here is, but if anybody has questions about that, feel free to ask. Or any other questions about what's happening in the marketplace. I don't know much about Bitmain's new miners that are coming out here this week, but I do know that Bitcoin short positions have hit a low. Is that? Can you confirm that, Chris? Have Bitcoin short positions hit a relative low here?
Yeah, they went from an all-time high in September to it's a 6-month low. Yeah, and then on the future side, it's flipped from 30-70 to 70-30.
Wow. Okay. So the patterns are good. So anybody have any other questions?
Brian, I put the BitCash chart here because it's leading the whole space. I think it might be worth 90 seconds to have everybody look at this chart and have me explain it.
Absolutely.
Hold on. Before we do that, I had a question.
Yes, Eric.
Okay, great. So during this next uptrend, that you say it's going to be 2 to 3 years upswing, is it going to be smarter to invest in Bitcoin Cash or Ethereum or one of these smaller but still very developed coins versus Bitcoin because they're going to go up faster because they're a lower value?
You know, it's and Brian, interrupt me. In my opinion, it's a little bit on investor preference, right? We think that the catalysts are there on the utility and security tokens more than they're there on any other token. That is, you know, our research division's opinion. But that, you know, if it's just chasing upside, I feel like building a portfolio based on that might result in being disappointed. So
Yeah.
I think,
Well, it's a risk.
got,
Yeah. So Chris, and we've talked about this before, and I think that I wanted to give you a chance to speak because I think Eric wants to hear your view, but it's kind of, it's an evaluation of risk, right? I think the majority of people that invest in altcoins and ICOs, I think the majority of retail investors that do that are going to lose money. That's been my experience. It's, you know, people feel the high of getting a high return, but they very seldom exit at those highs. And the other thing is a lot of these coins are grow up and built up on hype as opposed to real fundamentals. So my view is that we build our portfolio around, you know, say kind of use the top 10 coins as initial guideline, but then you know, have to determine for yourself what that is. But I see that Bitcoin, unless the stable coins, you know, grow significantly, will continue to be somewhat of an on-ramp and off-ramp in all the cryptocurrencies, and we can always count on Bitcoin kind of you know, being in the mix. It may not experience the rate of return, but from a risk-adjusted standpoint, I think you get a higher return if you adjusted the other cryptos for risk. I think you'll end up with a higher return even just in Bitcoin. But you want to be able to trade. So, you know, like Chris said earlier, they've got a group of you know, high-profile, high-volume cryptos that they've chosen to trade with and kind of roll between those. And that's kind of what that's kind of what I've done as well. Even though 6 months ago or so, I don't know the exact date, but I rolled everything into Bitcoin. And that's turned out to be an effective move. I'm still interested in these other tokens. I'm even interested in Binance Coin now, you know.
yeah, I could speak to that. That's a pretty neat one too.
Yes, precisely. Go ahead.
With respect to BitCash, if everybody can see the chart, you can already see very clear this is what's called a breakaway gap. This is classic technical analysis. This doesn't take a genius to look at this. Where this big downtrend line, complete, diverging momentum, bottom, a new low, beautiful, beautiful, overbought. And now we've got what's called a doji star. We should retrace because there's an old phrase that say no gaps go unfilled. So what are we expecting here? We're expecting a retrace to either top of this moving average or this candle here, which also coincides with trend line, which is confluence of support, and then a violent move up into this vicinity, you know, 8,500 range, to basically kickstart a fully confirmed uptrend. But essentially, from a technical perspective, Bitcoin Cash has just confirmed new uptrend. It just has to go through this down and up sequence to really cement it home.
So, in order to put this in perspective too, we've got a fork that's happening, potentially happening. I can't say for 100%, but it looks like it is for November 15th in Bitcoin Cash. And so we also have to put into view the fact that this jump is in anticipation of what that fork is going to mean. Anybody that owns Bitcoin Cash is going to own tokens on both sides of the split, right? And
Yep.
in most cases in the past, people have won. It's turned out well for them, right? Even when Bitcoin
Yep.
and Bitcoin Cash split. And so this is kind of a speculative jump with people getting in there. From a fundamental standpoint, I believe that's what's driving it right now, is this excitement over a potential split and the benefit that might come from that. So you have to, what's going to happen beyond that? I anticipate that Chris is right, that it will grow. I don't know, from a fundamental standpoint, I don't know how rapidly it will, right? I don't know if it'll consolidate when it splits, if people are going to wait to see which one's going to be the winner. It's hard to tell.
Brian, you're speaking, luckily as investors, we actually have a use case here where the story matches the price. And so think about a fork, right? It's no different than a secondary if you're an equity person, right? So what does it do? It naturally dilutes, quote unquote. And so like you just said, Brian, some consolidation or retrace, right? Which would coincide with some profit taking from people that bought here and then sold here, which includes us to some regard. And then that retrace would be coinciding with the story.
Yeah, precisely. It will coincide with the story. And I think once that settles out, I do anticipate higher highs. I just don't know how quickly that's going to happen. But the whole sector is due for breakout to the upside. So if this is what starts to lead it, and Bitcoin starts to also participate in that drive, that will bring additional attention and market participants back into the market, which will facilitate maybe a very strong uptrend.
Yeah, I mean, even if looking at this, you have 100% upside to the May high. So there's plenty of aligned risk rewards here in a lot of these tokens at this time.
Yes. Yeah. So if we were giving investment advice, which we're not, but maybe move into a position before November 15th on the retracement, and take advantage of the move in Bitcoin Cash. That's a trade that I would say has a very high risk reward ratio. So I think it has a great potential for the upside. So I would say that's a great opportunity here in the coming weeks. Okay. Anything else with regards to the market? Any other questions that anyone may have? Please feel free to ask.
I have something I wanted to share with you guys, but let's wait for all the other questions.
It'll take us on a tangent. Okay. Any other questions about this, about Bitcoin Cash or anything?
Brian, I got a question.
Yes. Is that Marco?
Yes.
Okay, go ahead.
I want to know Chris's take on Bitcoin halvings every 4 years. How does that, behind, I guess in the history of Bitcoin, how's that played out, and how impactful is that on the price? Just insight.
Chris, yeah, feel free to share your view, Chris. That'd be great.
Again, this isn't my expertise, but I appreciate the question. I think the answer you're looking for is in the price action. There's some consolidation effects that occur, but everything's in a pretty defined price cycle. So I wouldn't argue one way or the other that might cause investors to pause because they're confused or don't know the specific catalysts either down or up, and that would be expressed in the price action.
Yeah, you'll see in the price action. So let me address that really quickly, Marco. As we all know, the amount of Bitcoin that's created every 10 minutes drops in half every 4 years. We're currently every 10 minutes, 12.5 Bitcoin is being created through the process of mining. Those miners, they pay for electricity. They pay for electricity and they get Bitcoin. That's essentially their model. They buy electricity and they get Bitcoin. In order to continue to pay for that electricity and also for additional capital expenditure to keep their mining equipment up to grade, they have to sell all or a portion of that Bitcoin in hopes of gaining a profit. And as we talked about earlier, in times when the price drops below what it's costing them to mine, they don't really want to sell. They hold, right? Typically, unless they have to, but they usually hold. When it comes to halving, the amount of new Bitcoin that flows to liquidity points in the market, to exchanges and so forth, drops significantly. And so you have a situation where there's an instant impact in the market. Like all of a sudden, the fundamentals demand a new low. Whether the price is there or not, they demand a new low because they're paying $6,000, $6,300 per Bitcoin to generate, and all of a sudden now they're paying $12,000 or $13,000 per Bitcoin to generate a coin, right? And so, and that manifests itself in different ways. You may have some Bitcoin miners go out of business because they don't have the staying power. You'll have a shrinkage of available supply, and therefore the price will dramatically move upwards. As Chris said, will be reflected in the price. But from what I've typically seen is it helps facilitate the next low. When I've seen halving take place in the past, usually in anticipation of that half, it drives the speculation to such a point that Bitcoin will be in excess of 12,000, maybe up to 20,000 or even higher when that halving takes place. And then that price movement draws in new market participants, gets mass media coverage, and brings in a lot of dumb money, institutional money, hopefully this cycle, and creates a massive bubble. And as that bubble pops and comes down to its new lows, that new low is typically around where the cost of mining is to mine Bitcoin. And during the next halving, that will be, about double what it is today, right? The cost to mine a Bitcoin at the next halving will be in excess of $12,000, maybe higher. Yeah, so 18 months ago. Thanks for sharing that, Marco. Yeah, so we got 18 months to go, basically, until that happens. So we're going to have a nice run. Chris, I think that our next bubble, based on the sequence of events that's going to unfold, is going to drive us into some significantly high territory, that of which we haven't seen before. In the last breakout, your indicators told you that we would be up around 19,000, 20,000 range, which is amazing, which is great. Do you have any idea where this next, say, 2 to 3 year cycle will take us? To what levels? Do you have any kind of, projections on that?
I do, but for fear of not providing a service to my existing investors, I don't know that we could just hand that out.
Gotcha.
I'm happy to analyze past price action and explain it, but I don't want to, compliance would probably shoot me if I gave a price target anyways.
What's your personal feel, Chris?
I think Brian's not wrong to argue for new highs, but I just think that we got to take it one construct at a time. And what would certainly make the space maybe less bubbly and more robust in price action would be use cases spreading all over the planet. So I think that both are probably going to have their inner workings expressed simultaneously. But I think I can probably say it's fair to trade it from here to 12 and then see where it's at after that.
Right. Well, I've expressed to everyone, my predictions, because I really, in the past I have, with regards to, kind of a general idea as to the amount of momentum that we could see. And so I expect us to break through previous highs and go significantly higher in our next cycle due to the incredible hype that will happen around. We all saw what was going on in January. right? In January of this year, every single day, Bitcoin was in the news. And there were a lot of people getting involved in the fear of missing out. And I like the way what Chris said about institutional money being dumb money. Institutions are much more in tune to Bitcoin cryptocurrencies than they were previously in 2017. They're much more prepared to make a move now than they were back during our last cycle, right? During our last cycle, we had very little, less than 1%, I would say, of institutions involved in that bubble. I think this next bubble will have a much larger amount of institutions involved in that trend. Would you agree with that, Chris?
Yeah, and I think to put it in historical perspective, you have to look at the allocation and management teams of these institutions, right? Last cycle and the cycle before that, you primarily had the principals of those companies involved. They were quicker to take risks when they saw value, right? And my argument is that a lot of people just manage to keep their jobs, right? So they're not going to do something that's contrarian or against the trend. And at this point with society, I guess we're not expecting them to. So I do think, Brian, you hit the nail on the head. They'll likely chase, and as long as the market cap of the space expands and there's more liquidity, fluidity, and transactions, it can invite the capital.
Okay, perfect. Since we're short on time, I'm gonna jump over to Peter. And did you want to show, Chris, first? Did you want to show historically what happened in the past? Did you want to kind of give that illustration as to what happened during the last bubble?
Yeah, can you see the 5-year chart I put up?
Yes.
So basically, all of these price points you can see give pretty accurate measurements for their next one. So if you were to take this price and look at this confluence of resistance around 12, that's kind of the height of this pattern. That's where we see maybe a breakout or potential retrace. But then looking at this as a triangle, you could foresee just flipping it over on it itself. And that would be kind of a similar thing to taking this triangle here, which gets you to here, and then this one, which gets you to here, and then this was the rage. Like from this point lower, very, very beautifully technical, and then this was that rogue exhaustion point.
Right.
So we like this level as our bull case. This 12, and,
right.
And price has memory. So you see how many times price has hit that point. Hitting it again is almost like a magnet, the effect of it.
Yes. And the breaking through of it to higher highs is an emotional experience for investors, right? As we break through the 12,000, I think the media is going to be all over that. I think all the people that were saying that Bitcoin is going to go to zero, that it's a fraud and a Ponzi scheme on CNBC and on Fox Business News, they're going to pull them back on the air and ask them, what do you think now? Bitcoin is still here, as it has been every other time that this has happened.
Well, you can read the writing on the wall. While the institutions haven't really actively entered the trading market yet, we've spoken to everybody from Stanford, Yale, to Blackstone. What they have done, and you can track this and kind of know and predict what the next moves are. You see Goldman buying into BitGo, you see Tiger buying into Coinbase. So to me, that signals that the space is improbable to go to zero, and that smart money is placing some bets strategically as a VC would, knowing that, hey, we're not going to throw money in 10 different hedge funds, but what we are going to do is stake some of the companies that are already cash flow positive.
Yes. Yes.
And obviously custody is a big issue. I'd like to see, we're tracking a lot of different hot wallet companies coming out. So we'd like to see some more robust technology there, more security than is presently there. And all of that is part and parcel to a new uptrend. Unfortunately, we talked to Buffett 30 years ago, he would say the inverse, but where we are in this disinformation era, that's just how we have to play.
Yeah. Okay, Peter, what was your question?
So, Chris, would you mind stopping screen sharing? I wanted to share something with everybody, but there can be only one share at a time.
Sure, it depends on what you're going to share.
Well, it's going to be okay, I think.
Nothing inappropriate.
That one?
So, all right, can you see my screen?
Yep.
I was looking through old board posts, and I found one from 2014, and it's especially valuable because it's from 2014, where people were trying to apply linear regression to predict the price of Bitcoin, and they came with a graph, something like this, which actually seems to be working. We see that at the end of 2017, they expected the price to hit a little above $10,000, and it did even better than that. But as you see over here, you know, it goes, it's a curve fitting, so it's never a perfect curve. Sometimes it goes above, sometimes it goes below. And it did hit over $10,000 at the end of 2017. And they predicted that price growth is going to slow down a little bit, but it's going to continue into the future. And they actually wrote a function which describes where that price is going to be. I'm going to publish all of that on our Slack account. So according to them, no, that's not the right one. According to those people, the price of Bitcoin today should be around $19,000 if we were going to fit the curve. Let's see. Yeah, it's $19,000, 885, right? And so far it has been checking out. I find it very interesting because it was published back in 2014. And if your question is when are we going to hit million, according to this function, that's going to be sometime in 2026.
Right. Well, we used second derivatives in a lot of our analysis, but remember the input's still price to that linear regression. So it's a lagging indicator, and depending on price, the curve would be fit to it, right? So if it were that simple, obviously everybody would use it on every asset and they'd all be rich. But point being, we want to arm ourselves with all the tools in the tool shed. Linear regression, especially on a log scale, we actually prefer that in our analysis, is certainly one of the ways to basically see where you're wrong. That's what we use it for. We don't use any indicator to be predictive. We actually do reactive analytics on a quant basis, not predictive analytics. But I do think that however you want to analyze it, the reason the success ratios of indicators like this are so robust is because price is unbridled. You don't have the Fed messing with stocks and interest rates. You don't have the ECB buying corporate high yield. This is purely expressed by human emotion and really liquidity conditions over the planet. And as a result, it's going to conform to linear regression. It's going to conform to price target analysis. It's going to conform to Fibonacci's because that's what humans do. Whether it's stocks or it's medical bills, all of it can be thrown up on a log linear regression chart.
That is true. However, this what I find very interesting about that they did this chart in 2014, 4 years ago, a little over 4 years ago, and it seems of kind of it kind of does predict what will happen afterwards.
Yeah, even these intervals. If you see your intervals here, these are Fibonacci numbers.
Yep.
Yes, that's right. They're Fibonacci numbers. So, and a part of it, so it's kind of it's a self-fulfilling prophecy also at the same time, right? Because there's nothing impeding investors from performing based on their belief, and so it actually does what it is people believe is going to happen. So it could very well follow this timeline. Now that would be great. Let's not necessarily manage our portfolio based on this and just assume we're going to go long forever, right? Let's pay attention as Chris has given us some valuable insight into price action.
Yeah, because what this says to me, Peter, sorry for interrupting, Ryan.
Go ahead.
I'll give hopefully the very few pearls of wisdom I may have as an investor. What this says to me is that because this is measured in fiat, this speaks more to the demise of fiat than it does to the purchasing power of Bitcoin itself.
It could. It could. To me, the way I use it though is, it validates. I try to see whether the market is undervalued or overvalued. If it is significantly above, I think the market is overvalued. If it is significantly below, I think the market is somewhat undervalued.
But think about it, if let's assume fiat stays, cohabitated with it, $1 million Bitcoin would prevent the space from doing exactly why we're all investing in it. It might make us money in USD terms, but there's no way, Juanita in Argentina, who's had her bank accounts and savings stolen 3 times in the last 20 years, can use Bitcoin at $1 million. Even though I know it's subdivided, I just think that would prevent a lot of the use cases being seen to fruition. That's, again,
I would disagree, Chris. I think that I think that people would easily, because right now we call 1/1,000,000th of a Bitcoin a Satoshi, right? So they would just
correct
call it a Satoshi and be denominated in 1/1,000,000th. Or they could also we won't do that, but we would use a fraction of a Bitcoin for money. I don't think it creates a barrier at all, right? It's just it's a numerical measurement of value. I think people's perspective, though, oftentimes people believe that they can't get involved in something that costs so much. People believe that through this last cycle, but as we know, I can transfer and buy a penny worth of Bitcoin today, and even when Bitcoin's $1 million, I'll still be able to send you a penny worth of Bitcoin.
Right, and what I hope is that it actually separates itself from USD, Euro, basically G20 or even G7, and it goes linked more to a true commodity basket, which we even think water is going to be added to this over the next 5 years or so, where oil, water, wheat, etc., basic staples, so that becomes a true inflation hedge and a true measurement of purchasing power that can't where central banks' inflation policy can't rob people of their purchasing power.
Yeah, precisely. Yeah. So, but the good point is that, when Bitcoin is $1 million, the amount of people that will be measuring Bitcoin's performance in dollars or moving it back into dollars will decrease, because the use cases, the use cases out there that will justify that price will be significant. We don't know yet for sure if Bitcoin is going to take over the payment industry, for example, right? We're hopeful, we're optimistic that something like Lightning Network or Liquid, some kind of side chain technology is going to make Bitcoin scalable so that it can replace, the payment industry potentially. But that's yet to see that happen. We're all hopeful and optimistic that'll happen, but we don't know yet. We don't know if some other token will come and do it, but they're clearly the spread of use cases will be 100x what it is today by the time we reach that price level of $1 million, which will be phenomenal for our society. It'll have a tremendous impact on humanity, and that's in large part why we're here and why we enjoy this space.
Yeah, that's what we're passionate about at my firm, and my partner Chaim Bodek is working with Oxford on some of those uses. I'm working with MIT, and all the folks involved are very, very excited on this stuff.
Yeah. So Chris, I want to thank you for joining us today, and I know that you plan on joining us in the future, so I appreciate that. I want to wrap up this call in respect of everyone's time. Thank you so much for being here today, and I'll go ahead and add Chris to the Slack's channel where you guys communicate, so that you can ask Chris questions directly or ask within the chat group, and he can respond to the group going forward. But Chris will be an ongoing part of this community, and so I'm glad that he had the opportunity to share so much today. Thank you, Chris.
Yeah, thank you for having me. I enjoyed it.
Good. Okay, thank you, guys. And until next week. One more last thing. Next week we will not have a call. We will not have a call next week. Well, let's see. Hold on. I'm going to be in Singapore next week, And so I'll notify you. Right now, tentatively speaking, we will not have a call next week. We'll skip 1 week, and then we'll have it the following week just before Thanksgiving. But if I can make it happen, I'll let you know. But as current, I don't know that I'm able to. So I want to let you guys know in advance that next week's call may not happen. Okay. I'll notify everyone in Slack if it does.
Sounds good.
Okay. All right. Thanks, everyone. Have a great week.